What's up, guys? Jake here with a quick message before we get on to our show. Please make sure that you like this video below, make sure that you are subscribed to the channel, and also make sure that you sign up for notifications. With your guys' help, we can ensure that all of the guests get the right attention and audience that they deserve. I thank all of you guys for joining me along this very adventurous journey, and now let's get on to the show. Welcome in, everybody. You are now joining Casey Ryan on the guest list. Casey is also a fellow Las Vegas unicorn, born and raised out here in Vegas, and he is the founder of WeBuyAnyVegasHouse.com. This man has had an incredible amount of success. I'm very excited to learn the art of flipping houses and what it is to grow up in Vegas. So, Casey, thank you for coming on.
Yeah, absolutely. Thanks for having me.
I was watching a few of your previous interviews throughout this year, and I saw that you had an incredible ROI return on your investment that seems like nobody else has really been able to even come near, which is, I think is insane. It was $2 million, and you kept about 68% of it.
Yep. Yeah, that was 2019. 2020. We had a bigger year than that, and then our margin was it was in the low 70s this year, because we rather than strictly just wholesaling properties, we were taking them down as flips as well, which is like capturing that other back end revenue. And I can explain what both of those are.
Yeah, just for the listeners, just because since I have a wide variety of people on here, and sure. I'd mentioned I had Lacey on here before, who runs a real estate company, but I know there's so many different variations to it. What's the difference between flipping and wholesaling?
Yeah, so flipping is what everyone's mostly, the most common term that everyone's familiar with. It's obviously taking down the asset, as in taking ownership of it, closing on it, renovating the property if you have to. I mean, most of the time you do, and then reselling it. So you're actually taking ownership, you're taking on all the risk, and then you've got to raise capital and all the other nuances that come along with it. The other side of it is wholesaling, which is essentially if a property is worth, let's just, for an easy example, $200,000, you get it under contract for $100,000, and an investor flipper will pay $130,000 for it because they've got to put another $40,000 into it, or whatever the case is. So they'll pay $130,000. You have a contract at $100,000. You just basically take that contract and you create a second contract called an assignment agreement. You assign your rights of the contract to that investor, and then you just take the fee in between. So upon closing, it's just another line item on the HUD. The buyer basically pays you that assignment fee for your interest in the contract. You take the $30,000 in that scenario. You don't flip the property. You don't deal with the contractors. You don't deal with any of that stuff. And they buy the property. They got a good deal on it. They're happy. You won. They won. And that's basically what it's like. And a lot quicker sales cycle. Obviously, a lot less capital involved. It's a great way to get started in real estate too. So, but when you're wholesaling, obviously, if I have that property for $100,000 and I decide to wholesale it because maybe the rehab is just too extreme for me, or I'm just with my cash flow management, I don't want to take on that one at that time. If I give it away, then essentially that investor is going to make their margin on it, which let's just say they're going to net 15 or 20. You're leaving that on the table. So this past year, in 2019, we were probably like 70% wholesale of our properties that we did. In the past, for the first 3-4 years, all I did was flip. And then in 2018 and 19, I switched more back to wholesaling because I wasn't really sure where the market was going, and I was trying to build a different type of company with direct to homeowner marketing. So, anyways, 2019 was about 70% wholesale versus 2020 was about 75% flipping. So, whenever you're capturing that back end revenue, your ROI is going to be higher. You're going to have a higher margin overall throughout the year, profitability wise.
Right. But then when you're flipping, you're definitely taking on more accountability. There's probably more people that you have to hire to bring into the process. But there is that margin, especially in Vegas's market, where I've saw that the average home sale is upwards into like the mid 300,000s, or even upwards of the 400,000. So that's, that 10% could be $40,000 that you're leaving on the table.
Exactly. And there's a lot of properties. Obviously 2020 was a year of uncertainty for a lot of reasons for a lot of different industries. When everything started getting shut down, I mean, my immediate reaction was, okay, well, here comes the recession, which in my business, we're buying undervalued properties from distressed homeowners. And so for me, that was exciting, because the opportunity that was on the horizon. However, I also saw it as, okay, well, I've got $7 million in properties that I own. Like if the market goes and shifts 15%, that's a lot of money. But, overall, I decided that whether to charge forward with, because we have a lot of properties under contract at any time, a lot of properties that we actually own that are under construction, and then a lot that are under contract on the resale side of it. So I had to make a decision on, I think we had like maybe, 15 or 20 properties under contract at that time. Like which one of these do I want to move forward with? Am I going to take the risk and keep charging forward? Or am I going to, just play it safe and cut my losses and, move on from these and see what happens? And we decided to charge forward. So it was a really, now in retrospect, it could have gone the other way, but it was a really good move because the market is absolutely on fire, and a lot of properties that, maybe we would have wholesaled for just to get out of really quick, maybe for a small fee, like 5 or 10,000. Some of those turned into the best flips I've ever had in my career, profit wise and ROI wise, because the market, as soon as they, started lifting some of the restrictions and people started to get more comfortable with what was going on, the market just exploded, and everybody that was like pent up waiting to buy just charged the market, and inventory was already extremely low. It's ridiculously low now. So yeah, you can, I don't anyways, but you could cut corners on your rehabs and do different things, or do a lot less of properties and still get more than you may have before
Right. And your business literally is so upfront. We buy any Vegas house. You'd think that your business would thrive when there's a downturn, there's a recession, people have to get out of houses really fast. I know that you just mentioned that there's a low inventory rate right now, extremely low. Once they start lifting moratoriums and we see like an increase of, I guess, inventory, is that where you would come in and probably be able to pick and choose which houses? Because when there's low inventory, you would assume it's probably houses that are probably been remodeled already. They're very new. So it's probably harder to come in and buy cash for those kind of houses.
So the thing always is regardless of what the market's doing, it just kind of, when we have the ability to either wholesale or flip, it offers us a lot of flexibility. So if the inventory starts to climb, essentially all that's going to change is the price that we're purchasing the homes at. Because if inventory is super tight, I know if maybe I could have only paid $140 for a house, maybe now I'll be able to pay $153 or so forth. So we just adjust our offers accordingly. And especially with wholesaling, the sales cycle is so quick. Like, from lead in to revenue is, 20 something days, like 22 days a lot of the time. So the sales cycle is a lot quicker than if I'm renovating and flipping a property that it's 123 days or something like that from, the time that we close on it, from lead in to closing on it to reselling it, somewhere in that range. So when things start to shift, all we're doing is adjusting our purchase prices. And if we're having to lower our purchase price, obviously that sometimes is going to restrict our volume, because a deal that somebody may have taken X dollars for, now we have to offer them a little bit less because we know the inventory is climbing and we know we're not going to be able to sell that property as quickly. We're going to have a lot more holding expenses. So when you start to make lower offers, you do less deals. That's just the way it comes down to. So, but our business is so fluid that regardless of what's kind of happening with the market, we're able to adjust very quickly.
Okay. And your business is immediately the first, I guess you'd say, hands-on in the home sale process and refurnishing, right? Because you're buying generally, when I think of like a real estate company, I think of somebody who has like a bunch of real estate agents that are selling the house.
Like Keller Williams.
Stuff like that. But you don't really think of people who come in and are the ones that are, scaling the inside of the house, trying to figure out, do you want to add a modern touch? Like what you kind of have to get into the psychology of what a homeowner wants to even understand the whole process, right?
Yep. Yeah. And that goes with any, ultimately, we're in the business of buying and selling houses. But at the end of the day, our company's a sales and marketing organization, just like any business is. And whenever you're going into, like, let's just say you're going to an appointment with a homeowner, you're always going to be, trying to adhere to what they want and make them feel comfortable. And honestly, even I always train all of our guys to, obviously we're a business and we have to make money, and the way that we make money is by buying the house. But a lot of times, you get into these homes and you see that somebody has like a very nice house and they might be in a tough spot and they think that this is the only option for them, but we'll always make sure that we are giving them the best solution that fits their situation, even if it's not in our best interest. Because at the end of the day, you know, we're going to be fine, but we just want to make sure that we're putting good energy out there in the world. So whenever we go into the properties, we're making sure that see what that person wants. Like what's the end outcome they need. And we have the experience to tell them us buying the property is not the best option for you. You're leaving a lot of money on the table. And so a lot of times we'll push them in another direction that they're forever grateful for us. So I don't know if that answers your initial question, but it's always a sales process, no matter what it is, finding out what somebody needs and wants and helping them come to that solution.
Right. Yeah, we could circle back to the original question, but this leads me to another one, is that when you come in and you offer cash for these houses in cash settlement, that sounds very appealing, right? Like, I get to go right out the door right now with a bunch of money. Are you saving anything on taxes or anything like that when it's a cash settlement? Or like, are you saving money from the loan organization who takes
saving money? Pieces? You mean as far as what the homeowner would have had to pay?
Yeah.
I mean, yeah, obviously. So whenever we make a cash offer, it's a net offer versus like if you go and sell your house on the market. That's why people get so hung up on what the sales price is. What they really need to be looking at is what is your net, just like in any business.
Yeah, that's the big question, because I know a bunch of I had on Mike Peregrino, who runs homey.com.
Okay.
And he was talking about how the real estate agent process, it comes out to almost 12 to 15% off of what you would originally make. So that's why I was curious on, like, is there like a hidden saver cost from those percentages when they receive a cash settlement? Yeah,
I mean, the obvious answer is that if we're buying it directly from them, they don't have to list it on the market and they don't have to hire a real estate agent. Obviously, I'm also licensed, but that's just to resell our properties after we renovate them. But I'm not charging sellers any commissions at all, and I'm not representing them. I'm purchasing them for myself. They're selling, basically. It's just a lot more cut and dry process, and they're saving the commissions that they would have paid to the real estate agent for listing it, which is usually standard is 6%, 3%, and 3% on the listing side, 3% for the buyer's agent, total of 6%. They usually have to pay all of their closing costs. When you list on the MLS, the seller pays for certain expenses, standard. I mean, everything can be negotiated, but the assumption is that they're going to have to pay for transfer tax, the title fees, escrow fees, things of that nature. We just pay for all of that stuff just to make it cut and dry, simple for them, so they can understand. Okay, I owe $100,000. I need to walk away with 50. What can you offer me? I can offer you 150. Great, that hits all my needs. I'm good. And then we'll explain. We're always up front right away. Like, hey, you may walk away with a little bit more money if you list on the market, but some people's houses are not in a condition. They're going to have to put $30,000 to even get it financeable, because a loan company or mortgage company, Bank of America, whoever you're using, they're going to have certain requirements. So a lot of those repairs have to be done. And a lot of homeowners aren't going to move into this house that needs $40,000, $50,000 worth of work, and they don't have the money to do it, nor do they have the interest in it. They're like, nope, I don't care if I could get more money. I want to be done. I want to go buy my motorhome and drive across to Mississippi to be with my family tomorrow. So it's a convenience thing, so they go that route, and sometimes, we buy a lot of properties that are listed on the MLS too. In a scenario where that homeowner, if they initially just came to us, they would have netted more, because they now are paying all those closing costs. They're now paying the realtors to list and everything, and we're still buying it at the price that we could have bought it from them directly, where they would have had all those savings. So they do save a lot, and sometimes they may not net as much. Sometimes they do net the same or more. When they work directly with us, but essentially the savings are roughly, let's just call it 8 to 10% on the expenses that we save them or that we pay on the closing costs. So they save right off the bat.
That makes complete sense. It sounds like also if your house is a little dilapidated, or maybe you are ending your run on the payments and on your mortgage, maybe that's more preferable. And if a house is about to go into foreclosure or is in that kind of process, are you guys able to come in and help assist in that process?
Yeah. I mean, we've closed houses in like 16 hours. Like if the scenario is right, like, and there's no HOA where we have to wait for certain things, or sometimes if there is, we'll just close without it. We just go. But we'll close houses really quick. If they've got a looming date that's like, it's going to be sold at auction in 18 days or something like that. And they waited and waited. They came and talked to us, but they're like, well, I want to explore my options. Before you know it, they're down to 6 days. And it's like, okay, do they let it go to foreclosure? Because a lot of time, the difference between now and 2008, when everything collapses, now everyone has equity because the market has appreciated so much. Most everyone that's bought in a time where the market's exploded since then. So they have equity. So it's okay. They're behind on their payments because they lost their job or whatever the scenario is. They owe, let's say, $12,000 back payments. Okay. They were barely able to keep up with their payments in the first place. It's going to be very difficult for them to come up with that extra $12,000 in any reasonable amount of time. So let's just say it's going to foreclosure. If somebody buys it at foreclosure and let's say all in all, even with their back payments, they owe $120. Well, the house may be worth $230 and I could pay whatever, let's say $160 for or whatever the case is. Like if it goes to foreclosure, all that equity's gone. So it's better for them, although they're not getting the most amount they possibly could. The alternative is they lose it all and you'll walk away with nothing. So it's funny. A lot of the times, like these people, after they go through this whole experience and they've been in, usually by the time that it's going to foreclosure, this has been something in their life for, 2-3 years that's been going on. So at the end of it, my main sales guy, my best guy his name's Ryan. Like they will like write us reviews on Google, be like, he is my guardian angel. Like they feel so grateful that you've taken this problem off their hands and let them walk away, because a lot of other investors in town will like take it, like we don't try to hit a home run on any one deal. It's like we're just going to hit a bunch of singles, and just stay consistent. And, we're just trying to feed our families too. But so a lot of the times, like the other other investors in town will just go straight to like, okay, well, I'll just take over, or I'll just pay off what you owe on the property and you can move on. It's like, we'll hear some homeowner saying like, oh, I talked to this other guy. He said he's just going to pay off my mortgage. It's going to be great. It's like, wouldn't you rather walk away with $30,000? Like, I know that I'm going to end up essentially just paying that extra money, but it's a win for me and it's a way better scenario for you. And they are forever grateful. Like some of these people are like lifelong friends to him because that's just his personality. He's like, he connects really well with people, but they see you. A lot of people see this business as like, maybe you're taking advantage. It's not the case. It's like, they don't have other options really.
Yeah. I could see how that can be misconstrued on the intentions of what you want to do, but the way that you presented it sounds actually somewhat fulfilling, because you're keeping these people off the street and they can take that money and go confide in an apartment for now until they can readjust to whatever their life presents themselves.
Yep, exactly.
But when you come into some of these, we'll just say it's a house that's about to go into foreclosure. The inside is a disaster. Do you like those kind of houses because they're a little bit more of a project, but maybe it gives you a little bit more opportunity to construct it to a more modernized version of kind of what our generation's looking for?
I mean, anytime we walk into an appointment or honestly, a lot of stuff we try to close over the phone. But as soon as we see photos and we see a house as a disaster, like to us, that's like a beautiful sight, because we know that person is going to work with us because they're going to explore all their options, and we know that we can build a relationship with them and get them the best solution to their problem in, the most professional way. So when I see that, I'm always like, great, they have to sell to an investor, period. Because a lot of times people want cash off. They want cash and they're like, oh, I need a cash buyer because, my house is, I owe 200 on it and I need to, it's worth 200 and I need to walk away with 230. So I need a cash buyer because I know it won't appraise. It's like, well, you got to pick one or the other. It's like, you don't get cash and full retail price. A lot of people don't understand that. So we get a lot of leads like that. And our leads are very expensive to the people that we're targeting is like, the 3 to 5% that end up selling to a cash investor. So it's very hard to narrow it down and target those types of sellers. So it's very expensive. So when we get a seller that we see the property super distressed, it's great for us because we just see the opportunity. We see the potential of what the property could be, and those are always the best to see the extreme transformations. So on the fulfilling side, yes, because I know that homeowner is going to be grateful, and I know that the transformation side of the rehab is going to be awesome. But on the flip side of it, I always find that if I run I call it a property avatar. So I'll take the last 500 deals that we've done. I'll go and scrape all the data and pull the square footage and all this stuff and see, average year bills, average square footage. Is a 1-story, 2-story, what areas, what zip codes, and the properties that we always end up netting the most or getting the highest ROI on are those cleaner houses that just need a little bit of a rehab that, someone can move in out once we paint carpet, paint the cabinets, like little stuff. Those ones we always do the best on, but they're just so boring. It's like, where's the fulfillment in that? I'd rather make less and get the experience, so.
Yeah, it really is about the experience because of that. When you're going in and designing, is there a specific type model that you look for, or is it every house is kind of different? Because how I see now, a lot of the houses, they're very refined. It's very like clean, straight edges. Most of the houses are pretty much white for the most part. It seems like that's what people are looking for.
Yep.
Is that like a specific model that you tend to design towards?
Yeah. So, in the past, I have shot myself in the foot by going not necessarily overboard on spending with the rehabs. We always do go like pretty much gut and go base or flooring, baseboards, new cabinets, countertops. You go the full stretch, which we don't always need to do, but I always prefer that model because if the market shifts or anything, I know that property's not going to sit. It's going to sell and I'll be in and out, and the time value of money. Well, that's like the most important thing. So that's why I'd rather spend a little bit more, but at the end of the year, it's like I can pump out way more properties and it just makes everything smoother. But when we're going through to design them, obviously you've got to factor in quite a few things. Like if I pay more for the house, then I have less of a budget. Essentially, if I make it a thinner deal, then I can spend less on the renovation. But I've learned not to obsess over, because I would be like, go every single property. I wanted to make sure that I'm looking at, do we want to go with the dark cabinets and light flooring and dark cabinets? We always try to create contrast on some level, but then at the same time, you want to make sure that what you're doing always appeals to the masses. Even if there's something that I might think, wow, that looks incredible, like that's a really bold fireplace that we designed or whatever. Now, it may look cool to 30% of people versus if I had just done the neutral route, then it would have appealed to 85% of people. So sometimes I have to remove that out, not to mention, if we're doing 150 houses in a year, there's no way, like if I go into it trying to design those little aspects, I end up just holding the jobs up because they're waiting for my decisions on certain things. You need to systemize and make things a smooth process for things to move fluidly. So the design has to cohere to that. So we basically have, let's say, like 5 different models, and depending on where the house is, what our budget is, what the price point of the resale on the house is, that's how we'll pick our finishes. Now, every once in a while, if I get a cool house and I love, I don't know if you're familiar with Paradise Palms. It's a cool mid-century community.
Where's that at?
It's not in the best area of town. It's like on Eastern and Desert Inn.
Oh, shit. Okay. I know exactly where it is. I grew up literally right in that area.
Okay.
I went to shop. So I grew up on Harmon and Sand Hill area. So
okay.
A little bit right down the street.
Yep, exactly. So, but there's all these homes that literally, it's called Paradise Palms, and Palmer and Kreisel are the architects who designed that whole community back in the 60s. And they're also the architects that designed a lot of the homes in Palm Springs, California. So they got, the slanted roofs, the A-frame homes with the triangle windows and floor to ceiling windows, like just awesome houses. But anyway, so whenever we get projects like that, like we'll almost always take them on, even if it's like, all right, this isn't the best deal, but I just love that area and love putting out that product because you can be bold there. You can express yourself in the design there. I love doing those when those are my favorite ones. But then also we've done a few like $1 million flips in like Red Rock Country Club and Southern Hills Golf Club, just like areas like that. And those are great too, because in those ones you can actually like you have to spend like money to put in high end appliances and stuff. So it's like a good blend of everything. So I've learned that those projects aren't the highest and best use of my time, but it keeps that fulfillment there, and it removes like the monotony of like, okay, a lot of times I stop posting pictures of our flips because it's like, like essentially people are like, I don't know if anyone's actually ever thinking this, but I'm thinking this. I'm like, how many times am I going to post a picture of the same house, same flooring, same cabinet, same, a lot of this
people love it on social media though.
They do. But then I'm looking at it, I'm like, this is the same. This to me, it looks, I'm like, same. The ones I'll post are ones like, okay, this one was unique. I'm like proud of what we did here. But yeah, I really enjoy the design aspect of it too.
The before and after pictures of home remodels are so breathtaking. Those are things that I just continually just watch. I mean, they've made countless shows about the same kind of style. It's very captivating in a sense because that just like when you go into a house where it's the before and it's so run down, and then to see the after picture and to see it doesn't even look anything similar to what it was before. I find myself watching those type of videos on YouTube all day about it. So it's like you're not only expressing your creativity, but then it's also a product of content creation as well, because you get to showcase those kind of things, because as we know now, creating content is what's king, and that's kind of the shift of where society's moving to.
Absolutely, yeah. Being capturing people's attention is the new currency. But back to the transformation thing. It's like people look their whole life and dream about, buying this house that they renovate and, get to make their own and go and do all these things. So it's like because everybody can relate to that, like wanting a dream home, wanting to build my dream home. Everybody's got to live somewhere. So everyone can relate to wanting that sometime in their future. So of course, people are asking me all the time, like, oh, how do you do this? How do you do the design there? Where do you get this stuff from? They're always like captivated by it because we get to do it. We're so lucky. We get to do it 100 plus times a year. It's great. But it after a little while, like you see, if anybody that's actually ever done a renovation knows that, especially if you don't have the experience to know like little details of measurements or know where to buy the best things for the best price, or also getting a good quality of this and that, like without having that experience, like going through a renovation is a horrible, like a miserable thing for a lot of people at the end of the day. So anyways, yeah, so we're lucky enough where we get to do it 100 times a year, and we have like all the crews in place that understand how our process works just to make everything super streamlined.
Are you in the trenches down there building, putting baseboards in, or are you more of the selective role and just helping with the design?
So no, I'm not. I mean, I'm not working on any of the houses. I mean, in the beginning, I would take things on when, I had to do like my first flips. I don't remember what year it was, maybe 2015 or 15. I was in there, like we were jackhammering stuff out, trying to take walls down and doing all that kind of stuff. There's no way that, it's good to know in any business, it's good to know every aspect so you're familiar with it, so that there's no way that you're going to be able to manage and monitor something if you don't really understand that role, on some level. I agree. And on the other side of it, ultimately, again, like I said, I have a sales and marketing business. We just so happen to be trading homes. I'm not working on any of the houses, and it's gotten to the point now because as we scaled up, like if you go and try to drive, if I have 25 or 30 houses at any time that we actually own, aside from what we have on our contract to buy, plus rentals, if I go around and I'm trying to drive all these properties, like you'll get to like maybe 6 of them in a day. Like that's all I'd be doing all week long. Like you have to have a dedicated project manager be doing that stuff. And now it's gotten to the point where, it's been 6 years that I've been doing this. A lot of the times I buy, renovate, and resell a house, and I never go to it once. So unless it's ones that require, the design factor.
It's a good position to be, and it shows your effectiveness as, a CEO and a founder, because a lot of times you see in businesses where people build something and they aren't able to pull themselves out of the gears of what's happening. And basically you just become more of just like a manager than actually a
high-paying job, right?
Yeah, and you have to be able to separate yourself. And that's what a lot of people get misconstrued about. A lot of these, CEOs of these public traded companies where they're not really doing anything, but it's like to be out there on the forefront to try to take the direction, it's tough. And retrospectively looking at things, you're like, oh, that makes sense. But being in that war room of however many people, even just one person or 10 people, or even by yourself, it's something that takes a special type of person and leader, but it does come with work and skill.
Yeah. And, I don't know if you've ever, have you ever read the book Rocket Fuel?
No.
Well, basically it's just outlining kind of what you described. I mean, there's visionaries and there's integrators, and fortunately / unfortunately, my blessing and curse is that I'm both for my company. So I'm the visionary, but at the end of the day, I just can't help myself. My background's in mechanical engineering, so I'm an executor. I'm an integrator at heart, but when you have that push and pull, the visionary, I mean, you need both absolutely in any organization, but the visionary portion of it is what allows the growth, and if I'm in there executing every day, then it doesn't just take away from my time. Now I'm working 100-hour work weeks instead of, being the visionary and thinking, rather than thinking, how am I going to do, or how am I going to do this all the time? That's how I thought for years and years and years. And I'm still trying to master that, but because whenever I have a new venture that I want to do, like, because we don't just flip, we're doing commercial deals. We have a development deal on some storage complexes. We want to do just a bunch of different things over the next few years. If I was constantly, anytime that I had a new idea, I'm like, I have to execute that. It would rob my time from my family and myself, which is the most valuable thing that we have, and it would rob my company of growth, and it would rob everybody in my organization of the growth that they would, be able to be a part of as well. If I'm constantly just trying to jump in the trenches and do all those things. So, just understanding what your role really is, whether you're an integrator or visionary. Right now, I am both. I'm trying to work on finding a really good integrator, somebody who just, executes and understands every aspect of it. But anyways, that
selection process is tough because you have to see a lot of yourself in them, but you also have to build that sort of trust with whatever experience it is there.
Yeah.
That's what makes that process so daunting, is sometimes you'll come across maybe 20 people who seem like they're the right fit, but they aren't. So that process just drags out longer and longer. But once you've selected the right person, then you can really take your business to extreme levels.
Yeah. And that's the hardest part is finding people in your organization to make all this possible, because we wouldn't be able to do any of this if I didn't have Ryan, my acquisitions guy. I wouldn't be able to do any of it if I didn't have Kelly or Core, like any of the people in my organization. We couldn't do any of it without them. And hiring is always the most difficult part. Like whenever I'll go to a lot of different masterminds, and it's the only place that I've found that I can be around high level guys. Like if you want to be around guys that are making millions of dollars a year, what are they doing with their time? Mostly, I mean, you have that one every once in a while that's, just systemized everything and has all the free time in the world. What I found is that the people that make that level of income are workhorses. And how do you get around people like that? They don't set time aside usually to hang out with friends. So it's the only place you can be around those people. And the biggest struggle that I see among all those groups, I'm in one of them that's basically 150 of the top real estate investors in the country, guys that are doing 10,000 deals a year. They all struggle. Like whenever they're saying, okay, what do you need help with? When we're talking in the group, they're like hiring. I need to hire a COO. I need a better process for hiring and weeding out salespeople. It's always hiring. So, being great at hiring and managing people is like the most valuable skill that you can develop. And if you're always integrating and in the trenches, you're never going to be able to master that.
That's such a good point. Especially in today's day and age, the classical resume is pretty much ineffective now. A lot of people have realized that the job experience is good to have. It doesn't always equate to success, but you have to be able to understand that person's mental capacity as well, to understand, are they creative? Are they trustworthy? All these different intangibles. And it's hard to see through just a piece of paper that said, oh, I was at this place for 2 years, at this place for 1 year. There's so many different processes. Is there any sort of intangible or quality you look at when you're looking to hire somebody?
There's a lot of people that are qualified to do certain things. At the end of the day, I value our culture over everything, because the first off, that's like what determines the how people are feeling significant in our organization, like how happy everybody is day to day. Like, are you excited to come to work or not? And if you're not, then that's a problem. You know, whether you need to have a shift in your mindset, or maybe you're not in the right vehicle. Like, our culture is incredible. Like, we have so much fun and everybody gets along so well. And even if I had somebody that was a rock star, but they're not a good fit for our culture, unfortunately, like, that's the first thing that I'm gonna look at. Like, how do you like vibe with somebody? How's their energy? You know, that's everything to us. Then secondary, is just making sure they align, which goes back to culture again, but with the core values of your company. That's super important. In real estate, experience is, in my opinion, less important than anything, because the figuring out real estate it's the simplest business ever, you know? So I can teach somebody real estate all day long. Anybody can learn it. You know, there's so many resources online. You can learn that stuff very quickly. At the end of the day, it's like, how do they work in our culture, our core values, and how do they deal with people? Those are like the most important things. So, and a way to cut, you know, through all the fat of when, if I posted a job interview or a job position on Facebook or Indeed or whatever, and I get a flood of, let's just say you get 100 applications. It's like, how do you start deciding who to go after? You know, because you could read a million resumes and you'll know none of the people there. So we started to implement more of like a different personality tests. Mostly, I mean, a lot of people are familiar with DISC. We lean towards one called predictive index, and it's scary how accurate it will be to who somebody is and how they'll operate. And I've seen other people that have large companies, like we have basically 1, 2, 3, 4, 5, 6, 7. Basically 7 people in our main organization. I have like one remote VA, a virtual assistant, but they have companies that have, and I have 3 sales reps. They have companies that have 35 sales reps. So they've gotten hiring down, and they just talk about when they start implementing these personality tests as like the first line of defense before they'll even consider getting on the phone with somebody. Their hiring success went from, 30% to like 88, high 80s, the low 90% of somebody that's successful, profitable, that's a good fit for everything, just from those personality tests. So that's the first thing that I'll always look at, is what does their predictive index look like?
Yeah, the screening process is tough. It's funny you say that. I actually just had a man on here. His name is Andrew Gardner. He's the founder or co-founder of Humanly, which is like it's a Y Combinator startup that focuses on the AI screening process. And they do it for like people who are getting like 300-400 different candidate interviews, and it's exactly the same exact thing that you described. Like, there has to be some sort of test or integration or AI API that kind of plugs in and can kind of weed out the people who aren't necessarily the right fit. And It's not necessarily just looking at their experience. They're looking at all these different intangibles and questions and things like that, because we know where society is propelling.
Right. And what's interesting about that the predictive index personality test is, it's like a 5-minute thing. It's not a bunch of random questions that to determine your IQ. It's literally, it gives you basically two sets of a quiz. Like, the first one is, select all the adjectives. It'll be like, respectful, dignified, like choose all these, adjectives that you think that others expect you to be. And then the next one will say, okay, describe, it's all the same set of adjectives. Select all the adjectives that you feel that you truly are. And that's all that the predictive index is. And it's scary accurate. And then there's I think there's 17 or so different personality types. And then I know whatever position I'm going to hire, I'm like, okay, am I going to be looking for a craftsman? Am I going to be looking for a sales position where it'd be like a persuader or a maverick or any of these types of personality types? A lot of times I'll get people that I maybe know in our personal lives. And I'm like, okay, take this predictive index. I'm like, there's no way they'd be a good salesperson. When I thought, I'm like, I like this guy, maybe he's good at sales. They take the test. I'm like, nope, not even close. I couldn't consider them, even though I wanted to.
It's tough, especially in Vegas, where everyone's, the 6 degrees of separation of Kevin Bacon.
Yeah.
In Vegas, it's like 1 to 2 degrees of separation. You can literally have anyone just in arm's length. And that makes it tough because you feel closer to everybody. Yeah. And so you want to hire everybody.
Right.
And so I've had it, my last business with Chameleon, Corey and I, we were friends beforehand and started the business, and we the business ultimately ended up closing, but we just found out later that it was just like our personalities didn't match as much, and that led to some different decision making that kind of ended up with the business that we had to close. And we're still friends afterwards, but I've learned that you can't let like your friendship be like the main predictor of if you want to hire somebody or not, because you begin to put blinders on past some of the qualities that if you go into an interview with somebody who you have never met before, it's more of a blank face, almost like a therapy kind of thing.
Exactly. Yeah. And, allows you to, obviously you want to have a great connection with everybody that's on your team that works for you, but it also helps if you're, cause I'm definitely guilty of it myself, of just, always hiring your friends. There's a lot more dynamics that come into it. And sometimes I've been lucky and it's very easy because of the people that I've chosen to work with, but I've seen so many times, and I've actually experienced it myself, where, you pick somebody who's like, let's just say, your best friend, and you go into business with them, and over time, if your visions aren't aligned, it's like now if it doesn't work out and you guys do decide that, like, hey, let's go do our separate thing, you lose somebody that was so important to you in your life, or you could damage it. That's like, and that's something you don't want to jeopardize. So not to mention that if you do, you don't want to feel like you have to tiptoe around or say, you don't want to say certain things because you don't want to damage the personal relationship that you have with somebody. It's always better to just hire outside, and then you have none of those factors all. And if things don't work out, it's not as a personal decision. It's like, ultimately this is the business, and yeah. So hiring your friends and working with friends is a difficult thing to do.
There's so many nuanced decisions when it comes to being a CEO, but that's why it's important to surround yourself. And as you'd mentioned before, we dove into the screening process, that when you're out at the top and you're not so intertwined with the mechanics of the everyday machine of your business, you're able to spot different opportunities.
Exactly.
And like in today's day and age, well, actually just more recently since coronavirus, commercial real estate's taken a massive hit, right?
Yep.
Like there's things that are like, there's places like New York where it's like 40% vacancy. I know Vegas is taking a really big hit. Do you see any sort of opportunity with commercial real estate moving forward?
Yeah, absolutely. I think there's there's always opportunity. You just kind of got to create it. I think that whenever there's uncertainty, there's obviously opportunity that comes along with that. So, and I'm actually, I'm buying a commercial office building right now for us to be owner occupied in. And, but I'm getting a really good deal on it because of exactly what's going on. They had a buyer rolling up into, Corona, and then they fell off, and they have another pending deal that they needed. They're basically moving out of it, and he just wants to get rid of it. So he's like not getting hump. He's like, I don't care if it's a few $100,000 different. I just want out of it. So there's an opportunity for me there. There's a lot of distressed people that are afraid of the shift in taxes, so they're trying to realize all their gains now in these or now in the year. Or right before the end of the year, before the tax increases happen. So they want to sell things, even if it's, for a loss. They want to take the gains now so that it's at a lower tax bracket. So they're willing to weigh certain things that just obviously provide opportunities for everybody else.
Yeah, a lot of people are fearful with Biden's plan where it's going to increase to 40% or even higher like that. Is it, when you're selling real estate, are the capital gains tax the same as, let's say, like a stock or a commodity? I know, like right now, long term, anything over a year is like 15%, and I think short term, anything under that's like 37% ish. Is real estate applied under the same tax?
Generally,
brackets?
That's my understanding. Yeah, I don't. I'm not quite sure all of the tax regulations with trading stocks, but real estate, the capital gains, like you said, if you hold it for, it's 2 years in a day, is 15%. Short-term capital gains, I think, is over a year. And I can't remember what that is, but everything that I do, unfortunately, is all taxed as ordinary income, which is the highest bracket, it just flows in as ordinary income. So the only way really to avoid taxes is to, one, make less money, and none of us want to do that. Okay. Two is hold assets. So that's why I'm doing this development. I'm doing a storage unit development, and I'm doing buying this office building along with, I'm keeping a lot of rentals this year. I think I'm going to try to buy a lot of rentals this year. The only way to offset your taxes is to hold property, pretty much. That's why so many different, I know that even if Biden increases taxes in various ways, there's so many members of Congress that they shelter all of their income through real estate. They're all like, that's the only true way that the IRS sees for you to not pay taxes. And that's why, you see Trump's tax returns are $750. It's because they own a shitload of real estate, for lack of a better word. So they can depreciate them. They can accelerate the depreciation if they have a good year or bad year to get their tax burden down to nothing. And then what that allows them to do is that if he would have ended up having to pay $5 million in taxes, well, why wouldn't he just take that $5 million and go buy more real estate with it? And then it's paying him forever, because majority of people, especially business owners who are, savers and trying to build for their future, they're not going, well, I mean, some of them do go and buy Ferraris and stuff like that. But at the end of the day, we're building for passive income. It's like, I don't need to make $500,000 in a month. I want to make, $100,000 a month for the rest of my life and never have to work. So at the end of the day, all that ordinary income that you make, you have big months or years or whatever, like you want to hold assets so that you don't end up just paying almost half of that to the government right away. So you buy properties that will in turn pay you forever. Yeah,
it kind of it goes against the 80-20 principle. Have you heard of that one, where it's like 80% or 20% of your trades or your profits come from, or no, 80% of your gains come from 20% of your deals, and that kind of translates to a lot of different things. But when you have something that's compounding, you can make that consistently over time, and so you don't have to have as much anxiety. Like, oh my God, this is going to be the deal that I have to live off of for $100,000 for the next year or whatever. Yep. If eventually that becomes $100,000 a month, like you said.
Yeah, and a lot of I for so long, like, I just was always focused on like, oh, I want to double my net income, double my well, if I double my net, I have to not quite double my gross, but I just always wanted to double my income. And then it got to a point where I'm like, I don't need to have a big year. Like, I literally want my tax return to say 0 next year, because that means that anything that comes into my bank account and stays there, I'm going to pay taxes on. I want to build my balance sheet. I want to build my net worth. So that's what I've focused on moving forward. Yeah. So, and again, we were talking about this earlier, that the who, not how thing is now I'm focused on, okay, I know how to find these deals. I know which deals are the most profitable. Like, why am I spending my time doing these of my 60-hour work week or whatever it is? Why am I spending, 30 hours doing all these little things that can easily be, delegated to somebody for a normal salary, where I could go back and focus on our growth again? And if I'm stuck in this basically hamster wheel of a job, I'm never going to be able to build that portfolio or go look at those bigger, more profitable deals if I'm stuck there. So I'm just trying to remove all of those extraneous hours that I don't need to be working, so that I can free up more creativity, so we can grow, and so that I can take that 20% that you're talking about of my efforts and that generate the 80% and just focus only on those things, not the day-to-day operations.
Yeah, that's what becomes oftentimes strenuous and leads to a lot of overthinking and anxiety that could cripple your vision and kind of cloud your mind and that sort of speak. Commercial real estate, I find super interesting, because where society's going, I've said this on the podcast a few times, we're moving into this digital age. Yep. And so a lot of the traditional businesses you're not going to see filling commercial real estate. So a lot of these places are going to have to be repurposed. Like I was talking with a different guest about shopping malls, right? We know those are going to be pretty much extinct over the next few years. Amazon's kind of cut that out. So
they'll all just become Amazon warehouses.
Yeah, exactly. Yeah. So if you're going to be a commercial real estate investor, kind of like almost how you started with buying small houses, you kind of have to have a vision in a sense of what this new building might become in the future, because we know it's not going to be small stores anymore.
Right.
So do you have any sort of, do you take that kind of thought process in when you're evaluating commercial real estate now?
Yeah, I mean, I think at the end of the day, there's going to be a lot of companies that and I'm watching it happen, that have huge, let's say, accounting departments, whatever, that are in these massive offices that are high overhead, and they're shutting them down and sending them home to work from home. And they're probably seeing I mean, I always think that when you're in an office space, the productivity is different, the communication is different,
Yes.
the culture is different. Like I personally like to, I used to work all day at the office. I'd come home and I'd work all night at home. And it got to the point where it's like, I need to separate the two, because if this is all that I'm doing, like where's the fulfillment in life? So I just think that the office space is still a valuable for productivity for people. I just think that those larger office spaces are going to suffer the most. So the building that I'm buying is able to be subdivided into smaller, more reasonable spaces that these companies that maybe are coming. Normally I'd be targeting like a small team, a small investor, whatever, insurance firms, real estate companies, whatever, that would want to lease these spaces. Now I might be seeing that these larger organizations may still have a need for a smaller space. So you could get a strong tenant that's a massive corporation that only needs a smaller office space. And whenever you have a strong tenant in any building, that's going to determine the value of the building. Like residential real estate, like single family homes, they're going to be worth what the neighbor sells for. You know, that's how you determine the value. As when an appraiser looks at it, they're going to see what are the sales around it. Commercial real estate is beautiful in that it's the value of it's based on how much income, how much rent it brings in, you know, so it's determined that way. So if you can subdivide these spaces, and if you have a strong tenant with like a long-term lease, you'll get a higher price for that property because of the certainty that somebody can have buying it. So moving forward, when I sublease out my other spaces, I'm going to be looking for if I can target larger companies that have downsized certain departments and them take on a longer term lease. Maybe it's for a little bit less of a price, or maybe not, doesn't really matter, but ultimately having that long-term lease will increase the value of it. So that's one thing that I look at when I'm looking at commercial.
That's smart, because I think productivity's, from what I've seen in terms of the stat reports, productivity is actually increased from people who are working at home.
Really? Okay.
Yeah, but it does take away that social aspect, because when you're not around people, you become so disassociated with kind of what the culture and the mentality is.
And then where's the vision?
And
like, where's the goals and the vision for everyone to align? Mm-hmm. You know, that's the whole purpose of why you find significance in what you're doing for your career. It's because the team that you do it with, the people that you're doing it with, you're aligned and you're going towards a common goal. That's like what it's about. If you're just sitting at home, you know, plugging in QuickBooks charges and whatever, it's like I don't want a job like that. I would be so unfulfilled instantly. You get that fulfillment from interaction of other people.
Right.
Mostly.
Yeah. If I was running a business, I would do similar, aligned with what your thinking was, where, you know, if you have 100-person, we'll just say you have 100-person business to make the numbers easy. And you say, okay, I want an office for 40 people, right? Mm-hmm. And so then I would set up like some sort of app or something and be like, okay, we can pick and choose to see who wants to come some of these days. So it's almost creating like a scarcity for the office space. But then all of the employees will kind of coordinate when they can be in the office together. Because let's be honest, once you graduate college, a lot of people that you meet who become your lifelong friends are all your coworkers.
Yep.
You know, and that is huge on the Strip. It's huge in most other cities. So there's a little bit more creativity, I guess.
Yep.
And that sort of speak, but you also get to save money at the end of the day as well. And that's what one of the big bottom lines are for these businesses.
Exactly, the efficiency, of course. Yeah, and also in addition to that, it's like I try to make sure that, I mean, obviously we want structure in place and we like to have like a general hours where everybody's in the office, but like I like to make sure that everybody still has a lot of freedom. So if there's times where like sometimes my assistant will be like, hey, you know, this or that, like, do you mind if I work home today? I'm like, absolutely. You know, I want them to be able to have those freedoms to make that decision, because I know at the end of the day, they're going to take more ownership in a job that they have those extra luxuries. And, you know, with what's going on, it's like even easier to say, like, it's almost expected in a sense, like to have some level of like that work from home thing. And it allows people to be productive 24 hours a day rather than before they're maybe, you know, 9 to 5, when it's 5's done, 5 o'clock hits, they're out. Even if they do go home at 5 o'clock, now they've gotten comfortable to like, okay, well, I can get some stuff done at home. Like that, if I'm a little bit behind, I have, you know, the resources to be able to catch back up here at home, and they take that opportunity, and it's good for everybody. They get that freedom, and then we get the productivity that comes along with a 24-hour, you know, flexibility of workday.
Yeah, it's really focusing on that work-life balance. And yeah, you can take work home, or you can take, life to work, or whichever way you want to look at it. It comes down to how focused are you, how much passion is driven into your mission, and the people that you surround yourself with, I think, is most important. But the thing that I like the most is that we spend so many countless hours commuting to work back and forth, especially if you're in LA, you're literally spending an hour in traffic each way. It's a pain in the ass. So that 8-hour work day is actually 11 or 12 between getting ready, driving down there, maybe they don't pay you for lunch, and then coming back. And then it's just like, it's completely draining.
Yeah. It diminishes your quality of life.
And I've only worked 2 different jobs, both on the Strip, but I feel like there's an output ceiling, I guess, so to speak, because a lot of times after a while, you just you've mentally checked out for the day, and now you're just sitting around shooting the shit, or you're on your phone, or you're staring at the ceiling, and you're not really getting anything done. So it's a good balance for everybody.
To be able to work from home, you're saying? Yeah. And I think that's a lot of one of the additional reasons why people are coming from California is because that additional traffic, those additional taxes like that all comes down. At the end of the day, keeping more money allows you to, for a majority of people, not everybody has the ambitions to go build this huge company and do all this and that. So a lot of people, they do just want to work and come home and spend that. Their significance comes from spending time with their family or whatever. So when you add those additional tax burdens on there, okay, that's going to take away from their income. How's the only way that person's going to get more income is invest more of their time. So their times, so the taxes are already robbing them of their time because they're going to have to invest more time to work. And then the commute, that takes away from them as well. Not to mention the cost of living, it's astronomically expensive. So before you know it, you're literally just, all you're doing is working to survive. Then they come to Vegas. They see, the cost of living is way more affordable. Obviously, over the last few months, it's gotten a little bit more expensive, but ultimately, it's still much better than California. The traffic. I came from up in Summerlin. We were so spoiled by the freeways. There's rarely ever traffic. You can be anywhere in this town in 20.
Everything's
minutes.
A 15 to 20 minute drive.
Yeah, exactly. Yeah. So you have that extra time of commuting. You have the no state tax that you're paying. So people can want to move here because that allows them to make more money and spend more time with their family at the end of the day, which is where you get your significance, which is what all life is all about. Aside from the money, aside from the business, people are looking for significance. And however you get that is going to be determined by how much time you have to find that.
Exactly. Kind of projecting into the future and forecasting. Vegas was in the top 5, I think top 2 actually in the last few years of number 1 destination to move to. I think Vegas was number 2 for 2020. The year before that, I think, was number 2 as well.
Okay.
Do you think the real estate market continues this trend for years to come as people from California and all these other places decide that they can work remote from home, and then they get to experience Vegas and the tax breaks that come with it as well?
I think I love Vegas. I was born and raised here. I think it's an incredible place to live. People do talk about that it gets hot, but ultimately, during the summer, okay, if it's hot outside, you're in a pool, let's just say, or you're in a home in air conditioning, or you're in a car with air conditioning. It's in between those things, unless you got a laboring job where you're a roofer. Okay, there's some exceptions, but ultimately the weather is amazing here. To me, pretty much all year long. It's not too extreme on either front. So I think it's an amazing place to live, and I don't know that necessarily, a lot of people may say this, and I could be wrong here, but I don't think people moving from California is going to be the only driving factor of our real estate market. There's way larger things that impact it larger than that, which would be if they increase interest rates, it's going to make properties less affordable. It's going to slow down the market. If everybody if nobody has jobs here, that's going to affect the market more than just the people coming from California. Now, that being said, I think you're right that these large organizations that or corporations that come, they're going to have people living here that are working remotely. So it's not going to be just solely driven on the Strip and what it produces, So, obviously that's the overwhelming amount of our unemployment coming from that. But I think there's a lot of people that will still come to it because Vegas is great for a lot of other things outside of that.
Yeah, because of coronavirus, Vegas is going to have to go through a rebranding.
Yep, a rebirth.
Rebirth. It's happened multiple times. In the 90s, it was kind of family oriented. In the 2000s and 2010s, it was the entertainment capital with clubs and residencies and all these different things. I think the next phase is Vegas is finally going to blossom into this like very big metropolis that isn't just dependent on tourism.
Right.
It's because
gonna be a wake-up call.
It's a giant wake-up call. We have sports that are coming here. I was reading an article the other day that the LA film industry is actually moving out to Vegas. A lot of the different companies, because of the no state taxes, it's a purple state, so that's kind of been polarizing a lot of people depending on your political beliefs. So there's a lot of different diversity. Mm-hmm. I know the adult entertainment industry is began to migrate out here as well over the last few years. So we're seeing all these small different industries that are planting their seeds now, and then over the next 5-10 years or even 20, it's going to blossom into just massive industries out here. And then we get to see the Strip as just an experience and not a dependency.
Right. And I think too, for our economy in Vegas as a whole, or actually just the nation, like we already saw what happened. I mean, everybody's talking about like, okay, when's the market going to crash because of what's going on and all the unemployment. But at the end of the day, like we saw what happened when we were restricted for whatever the quarantine period was. And then once they let that off, if the floodgates open and everybody
huge.
And once people can start getting vaccines and stuff, I think we're going to see a second wave of that. And who knows how long that's going to last. But I've talked to quite a few like people way smarter than me, economists that went to Harvard and some of these masterminds these guys come to, and they all see it strong through like 2022, 2023, especially rents growth, and that's what their take is on it. Like once they open the floodgates again, because they have this vaccine, people are going to go out there with like, a blind optimism, like now I can go out in the world and do what I need to do and I don't have to be so fearful. So I think we're going to see a second wave of that'll trickle off, and then maybe on the back end of it is where we'll see some sort of recession. But of course, nobody can predict the future.
That's that recession or that dip's just been stamped into all of our minds. Like I tell you, literally since I graduated college in 2015, I'm like, I'm going to buy a house once a dip comes. I'm going to buy a house once a dip comes. And I was so certain it was coming this time. And I was like, you know what? Maybe now I'm just going to have to buy a house while the interest rates are low. Yeah, I'm looking towards the end of the year potentially, which will be a good time. I've always kind of planned for that, but it's just funny to show that we kind of have like that PTSD moment of 2008. Like it's going to happen. And then you miss the boat and you're like, right, fuck.
That's why I'm like, I felt the same way too. Often, like, cause when I was graduating college, I had a good degree in mechanical engineering and finance. Like I had a lot of good starting pay jobs, like salaries that I could have taken on. And I jumped in the real estate investing boat, and it was the best decision I ever made. I remember the day that I decided to do it. I was talking to now my wife, and I was like, I remember my hands were shaking, and I was like, I think I'm just going to do this. Like I had job offers, like, and I already knew that, my mom might be disappointed, like, cause they want to see, you fill out or you live the life that they have projected you to,
right, like you just put 5 years in for these degrees. Why aren't you going to use it?
Right. They didn't understand you're just going to walk away from all this stuff. I actually wanted to walk away earlier, but I'm like, I'm not going to just abandon this. I always wanted it as my nest egg, my backup. And I'm proud that I did it, because it just shows a level of tenacity to get that type of degree. And it taught me a lot of problem solving, but I jumped into real estate investing, and it's the best decision that I ever made in my life. I'll never look back and think, I wish I was an engineer.
It seems though that you did use those degrees, to say degree again, to a degree.
Yeah.
Because obviously you have to finance all of these different properties, and then mechanical engineering, you're good with how to construct different things within the building, right angles and whatever else, kind of
Pythagorean theorem and A equals MC squared.
So you kind of use that as like an underbelly to make different decisions, especially as a leader, because I know since you went to UNLV, I went to UNLV.
Yep.
The majority of people who graduate from UNLV with a degree don't use that degree to anything.
Right.
They end up going to something kind of completely different, or something tangentially related to whatever the degree is.
Yeah.
But that just shows like what Vegas actually is. And I call it the land of entrepreneurs. It's always rated in one of the bottom, I think it's like the bottom 3 or 4 in terms of educational standards in states. So it's like 48, 49, 50. But what's not a statistic is the amount of entrepreneurs that are out here. You know, like to say you can go study finance and mechanical engineering and then become a real estate investor and then go off and do all these other things, that takes quite a profound amount of entrepreneurship and leadership and visionary skills to do something like that.
I think, yeah, growing up here too, you see, like, we're so spoiled. Like if you were in the club industry, one of my friends, his dad was like the president of entertainment for MGM Worldwide. So like ever since I was in middle school, it'd be like, hey, do you want to go? Bruno Mars is playing tonight. You want to go? I'm like, yeah, let's go. Or like, you know, we'd be, for all the Knights games, we'd be in all the suites. So we're so spoiled, but it also like opens your mind to this opportunity because you see these people in these other suites. You're like, he would tell us, oh, this suite next to the guy paid $350,000 for the year. And it's like, let's go talk to that guy. Like, it just opens your mind to, if you grew up in, you know, the middle of Mississippi, you may never be around people that are spending that kind of money and seeing that that's even possible. Like, it's just like the sort of thing where it always goes in levels, but like if you see what like Jeff Bezos makes and you're like, they're like, oh, people, he's like, he makes $100 million a minute or whatever. I have no idea what it actually is, but you're like, it sounds fake. It's not even a real number, but like it opens up that is something that like you can't even really comprehend. But like as you climb in your levels and like you're making this money and this and double, and it's like there's always somebody that's like, wow, like it resets you Vegas allows you to do that. It's like it spoils you, but it also like sets this expectation that like, wow, this is absolutely possible out here. And I think that's why there is a lot of entrepreneurs, because they see people doing it and believe it's real. You know, where like I'm sure like there's a lot of people that you hear the kind of money they're making. You're like, I don't believe you. How is that even? How can you make that much money? It's like Wolf of Wall Street. You show me a pay stub for $70,000. I quit my job right now. I work for you. Yeah, it's like it just doesn't seem real to some people, but it absolutely is. And in Vegas, you get that experience a lot easier. It's more abundant. There's a lot more abundance out here.
I like that perspective. I haven't had anyone put it that way. It makes sense though, because it basically tears down all these social constructs of what people perceive college to be, or to kind of be this they call it modern day wage slavery, where they just kind of call it just programs you to go in and be programmed for 40 hours a week and do whatever you're told. But when you're around, you're right. When you're around these kind of people, and when I worked at the nightclub, especially Omnia, and people come in and spend 6 figures, and you're like, what the where is this money coming from? And then it happens every day, every weekend. People come in and spend $10,000. You're like,
endless.
Where is this money coming from? And it's just like the biggest like culture plot. It could be a woman, you know, it could be a black guy, it could be an older guy. Like, it's just like, it doesn't make sense. And then you start talking to these people, and none of those people are somebody who graduated college, or the majority. They're like, oh, I went off and started my own business, or I found this opportunity from a network. And it made me really give that epiphany of the cliche term, your net worth is your network. And that's really kind of what Vegas embellishes.
Absolutely. Yeah. And that's why like I said, I'm part of that mastermind. It's expensive to be in a year. It's expensive, and I'm in it because those people, like the things that they're doing, it's like you go around and you think that like maybe you're doing well, and there's guys in there making, you know, like I said, $20 million, $50 million a year. It's like where would I ever get to experience somebody like this on a quarterly basis? Never. So, and you talk to these people and you bond with them, and all these people just want to help you. They're like, they've gotten to the point where they have so much money, they don't even care. Now they want to give back. They're like, the power and the fulfillment is always in the process. Like, I look back, like I love where I'm at now, and I'm going to the freaking moon. But that being said, I remember in the beginning when I was going to college, and again, engineering, that's a lot of work. Like it was a lot of homework projects, all this stuff. I was also working valet at nights. I'd work 6 to 2, and where I was making most of my money is I was doing entrepreneurs. I was buying and selling cars like crazy on Craigslist. I have this photo in front of my parents' house. They lived in a neighborhood with no HOA, and they were at the front of the cul-de-sac. So there's 2 long strips of block walls, and I had like 15 of the exact same type of Jeeps lined up on both sides of the street, because I bought one, and I'm like, oh wow, I just made $1,500 there. Instead of thinking like I can make $1,500 a month, I'm like, I'm buying 10. You know, like I just scale up, and I did it like crazy. And that's actually where my best sales guy came from, Ryan. He started doing it with me too, helping me buy them, and I would sell them and all that stuff. But anyways, doing all those things throughout the week, and then working, and then that was still starting to learn real estate, and I had to, at some point something had to give. So I remember I wasn't gonna quit my engineering, but I was still doing the Jeep thing, and then I quit valet, and then at one point I'm like, I'm so busy with real estate, and I was actually making for first 6 months, I made like $850 or $600 or something like that, and then that was for the first 6 months. I was making almost nothing, and then I was like, I'm burning the boats. So I stopped flipping Jeeps. I just shifted all of my focus to this. And then it was like our first year together. That was back in 2015. We did 70. That was my first year focused in real estate as I was graduating. And we did, I think, like 75 properties. And it was just crazy because like I had seen a lot of people flipping and stuff. They do like maybe like the people that I thought were super ballers. I'm like, they're flipping 15, 20 houses a year. Our first year we roll in and do 75. And I'm like, and I realized all this business is data oriented. And all the things I learned in engineering is like, I just put my head down, I focus, and I just run with the data. Like I run the whole back end of my marketing, my sales, everything is data. And the better I get with that, the more money we seem to be making. So anyways, that just going back to it, I was like, I didn't get to tell my story at the beginning of how there was like 100-hour work weeks in the beginning, and just little by little, it just transitioned to what it is today.
Yeah, it's literally a perfect story of scaling, right? Mm-hmm. And that's something that we tend to get focused on, because in the beginning, no matter what you're doing, you want to be you look at to whoever the best in the industry is. You're like, I want to be Grant Cardone, I want to be Joe Rogan, I want to be this guy, I want to be Steve Wynn. But you don't realize that they all started small as well, right? In the same exact idea. So you started off flipping Jeeps, and then you're like, oh, I could take this same philosophy, this same work, and just apply it to things with bigger numbers. Right. And you're like, and it works almost exactly the same.
Exactly the same.
So that's what I tell all the people who listen to the show is like, we all have to start somewhere, right? My first 2 podcasts, they each got like 150 downloads in the first few days. I was like, oh, this is amazing. I'm going to the freaking moon. The next episode was like 5 downloads. And I was like, what happened? And then it started scaling more and more. And then I learned the power of consistency. People will be very interested in what you do in the beginning because it's new. Then they forget about it, and then they check on you 6 months later, and they're like, oh man, this guy's still moving along. Binge. He hasn't given on yet. Then they binge, and then they're hooked. And that's the same for if you're a salesman, if you're a content creator, if you're a founder, anything like that. If once you kind of gain that prestige from people, they realize like all the opportunities are eventually going to find you.
Exactly. Yeah. And any business that I ever look at, like outside, like I don't operate any other business outside of real estate right now, but I understand all the key components that you have to look at. And the first thing, when some people will ask me about other random businesses, and I'm like, the first thing I always ask is it scalable? Mm-hmm. Like, can you scale this efficiently? Or is it going to be so labor intensive and too many variables that like maybe you should try to build a different business that can be scaled very quickly? So yeah, scale is everything in business.
It's important. Before we get out of here, I always ask the same question, exit question on the way out to everybody. The question is, what does Las Vegas mean to you?
Oh, Las Vegas is my life, man. Like all of my family's here. It has my heart. And I when I was younger, I used to think, do I ever want to live somewhere else? And then as I got older, I just realized all the opportunity that's here. Not to mention just all the opportunity. It's just, I have all my family here too. Vegas is my life. It has my heart. I love Vegas. I'll never go anywhere else.
Such a beautiful town. That's so funny. Like, as you know, growing up here, we have a bunch of friends who always end up leaving, and then within a year they come back. You're like, that was pointless. It's just Vegas offers so many amenities that no other city can offer. It's just
right. And at the end of the day, even if you move somewhere else, you end up like whatever your mentality is, you end up recreating that same environment in that same city. It doesn't matter where you're at. So for me, I just every corner of Vegas is nostalgic to me because I grew up on the east side, then we were in south, and now I'm on the west side. Like I've lived a good chunk of the town, so everywhere I go, it's just nostalgic. I'm like, oh, I remember when me and my mom went to lunch here. Like it's just it's all of my memories, all of my nostalgia everywhere I go.
It's beautiful. For all of the viewers or listeners, where do I send them to learn more about you and your business?
You can follow me on Instagram. It's kcp.ryan, or just search me on Facebook. And you can message me anytime if you have real estate questions and stuff. Like I said, I love giving back to people. I'll jump on call. It's my Achilles heel is I'll spend too much of my time. Like I'm like, 45 minutes just went by. I'm just helping somebody. I like to help people. So reach out if you have some questions. I'm happy to help. And any of those platforms.
It's very fulfilling. I'll make sure everything's tagged in the show notes. Casey, thank you for coming on.
Yeah,
this
thanks for having me.
Eye-opening conversation. I'm glad I got to see kind of the ground floor of the flipping process. It's always such a cliche thing, and you see people on TV doing it. But now that I can understand it more and to talk to somebody who's successful in this business in Vegas and the ever-growing real estate community, it's very fulfilling for myself.
Cool,
so
man.
thank you.
Yeah, of course.
Thank you guys for listening, and we will catch you next time.